What if I told you that with just $1,000, you could kickstart your journey to financial freedom? Stick with me for the next 8 minutes, and I promise you'll have a roadmap to building your very own stock portfolio. Now I know what you're thinking. $1,000? That's pocket change in the world of stocks. But here's a little secret. Most investment pros started small. Why? Because starting small teaches you to make smart decisions. It's like learning to drive in a parking lot instead of on the freeway. You get a feel for the controls, understand the basics, and build your confidence before hitting the open road. When you start with a smaller amount, like $1,000, you're not going to be making any rash decisions. You're going to do your research, carefully consider your options, and learn from your mistakes without risking a huge chunk of your savings. Plus, starting small gives you the opportunity to see how the market works, how different investments perform, and what strategies align with your financial goals. First up, ETFs. You might have heard the term, but what are they? Basically, an ETF or exchange-traded fund is like a basket full of stocks. Instead of buying one apple, you're buying the whole fruit basket. Different companies, industries, even countries. With an ETF like the Vanguard Information Technology ETF, VGT, you're getting exposure to a wide range of tech giants, from Apple and Microsoft to Intel and Adobe. This diversification helps spread your risk. If one company in the ETF isn't performing well, it's balanced out by the potential gains of the others. And the beauty of ETFs doesn't stop there. They're incredibly easy to buy and sell, just like individual stocks. You can find ETFs that track specific sectors like healthcare or energy, or broad market indexes like the S&P 500. All right, maybe you're thinking, I don't have the time or know how to manage my portfolio. The world of investing can be intimidating, with its complex jargon and endless options. You're busy building your career, pursuing your passions, and living your life. Whether you're climbing the corporate ladder, exploring new hobbies, or traveling the world, your time is precious. Who has time to pore over stock charts and analyze market trends? The constant monitoring and decision-making can be overwhelming and stressful. Well, guess what? You don't have to. There's a smarter, more efficient way to invest without the hassle. That's where the magic of Robo-Advisors comes in. These digital platforms are designed to simplify the investment process for you. Think of them as your personal financial assistant, minus the awkward small talk and coffee runs. They work tirelessly to manage your investments. Platforms like Sarwa Invest build you a custom portfolio based on your risk tolerance, using Nobel Prize-winning strategies. They tailor your investments to match your financial goals and comfort level. You don't need to be a financial whiz or spend hours researching different investment options. Robo-Advisors handle all the complexities for you. Robo-Advisors take care of all the heavy lifting, using sophisticated algorithms to create a diversified portfolio that aligns with your financial goals. They continuously monitor and adjust your investments to keep you on track. It's like having a team of expert investors working for you around the clock, but without the hefty fees. You get professional-grade investment management at a fraction of the cost. And the best part? They invest your money across stocks, bonds, and more. This ensures your portfolio is well-balanced and poised for growth. This diversification is key to weathering market storms. By spreading your investments across various asset classes, Robo-Advisors help protect your portfolio from volatility and maximize your returns over time. Let's say you've got your eye on a few big-name stocks. You know, the Amazons, the Googles, the Teslas of the world. The companies that are shaping the future and dominating their industries. The only problem? One share of Amazon or Tesla could wipe out your whole $1,000 budget. I mean, we're talking thousands of dollars for a single share. It can feel like you need to be a millionaire just to get a foot in the door. But don't worry, that's where fractional investing comes in. This game-changing strategy is breaking down barriers and democratizing access to even the most expensive stocks. With platforms like Sarwa Trade, you can buy just a piece of those pricey stocks. That's right, you don't need to buy a whole share, you can own a fraction of it. Think of it like buying a slice of pizza instead of the whole pie. You still get to enjoy the deliciousness, but at a fraction of the cost. That means you can own a fraction of the giants, Amazon, Google, Apple, without breaking the bank. Fractional investing allows you to diversify your portfolio more effectively. Instead of putting all your money into one or two stocks, you can spread it across multiple companies. This way, you reduce your risk and increase your potential for returns. It's like having a safety net while still aiming for growth. Plus, it's a fantastic way to learn about the stock market. By owning fractions of different companies, you get to see how various sectors perform. You can make more informed decisions and become a more knowledgeable investor over time. So if you're looking to invest but feel limited by your budget, fractional investing is your ticket to flexibility and growth. Embrace this strategy and watch your financial future unfold with greater possibilities. Okay, let's be real. Who doesn't love a little extra cash in their pocket? It's a great feeling to have some financial cushion, isn't it? But what if I told you that you could earn passive income just by owning stocks? Yes, you heard that right. No need to constantly monitor the market or make frequent trades. You heard that right. No need for a side hustle or extra hours at work. Imagine having more time to relax, pursue hobbies, or spend with loved ones. With dividend investing, your money works for you, generating a steady stream of income. It's like planting a tree and watching it grow, providing shade and fruit over time. Want to earn some cash just for holding stocks? That's where dividend investing comes in. It's a smart way to build wealth without the daily grind. Dividend stocks pay you a portion of the company's profits every single quarter. This means regular income, which can be reinvested or used to cover expenses. Think of it like getting a thank you check from the companies you invest in. It's their way of appreciating your trust and investment in their growth. These companies are like the reliable friends who always split the bill. They share their success with their investors. It's a win-win situation. You could invest in well-established companies like Coca-Cola or Johnson & Johnson, known for their consistent dividend payments, and get paid while you sleep. These companies have a track record of rewarding their shareholders. Imagine waking up to extra cash in your brokerage account just because you own shares of a company. It's like finding money you forgot you had. That's the beauty of dividend investing. It's a strategy that allows you to build wealth passively, giving you financial freedom and peace of mind. All right, for all you ambitious investors out there who dream big and play for the long game, this one's for you. Let's talk about growth stocks, the Ferraris of the investment world. These companies are all about innovation, disruption, and pushing the boundaries of what's possible. Lastly, let's talk about growth stocks. These are companies that don't pay dividends because they're busy reinvesting their profits to grow even bigger. Think Amazon, Tesla, or Shopify. These companies are laser-focused on expansion, research and development, and market domination. They're the trailblazers, the game changers, the ones who are shaping the future. The goal here is capital appreciation. Buy low, sell high. Instead of paying out dividends, growth companies reinvest their earnings back into the business, fueling innovation and driving future growth. So there you have it. 5 powerful strategies to turn your $1,000 into a portfolio that grows with you. Whether it's ETFs, Robo-Advisors, or fractional investing, the key is to start now and be consistent. Remember, investing is a marathon, not a sprint. The earlier you start, the more time your money has to grow and compound. So, take that first step, explore your options, and start building your financial future today. See you in the next video.